Thinking about buying, selling, or investing in Northern Virginia? The May 2026 market numbers are finally in, and they tell a fascinating story. From the high rises of Arlington to the historic streets of Alexandria and the sprawling suburbs of Fairfax County, shifts are happening. In May, homes sold jumped nearly 19% compared to April. Inventory increased, but the median price saw a slight, intriguing dip. What does this mean for the summer market? Is the frenzy returning, or are we seeing a healthy stabilization? Let's break it all down. In today's deep dive, we'll cover the big picture, then zoom into specific counties, and wrap up with actionable strategies for your specific goals. In May 2026, Northern Virginia saw 1,958 homes sold, up 18.7% from April's 1,650. The median price settled at $812,000, a minor 0.4% dip from April's $815,000. Total active inventory rose nearly 7% to 2,733 homes. Buyers finally have a few more options to consider. Total sold volume rose by over 15%, hitting $1.82 billion. The market is liquid, active, and moving incredibly fast. Let's look at Fairfax County. As the largest jurisdiction in the region, it often sets the tone for the entire Northern Virginia market. We're seeing strong demand in the tech corridor along the Dulles Toll Road. Herndon and Reston remain hotspots due to metro access and job growth. In luxury markets like McLean and Great Falls, inventory is tight. Homes in the 2 million plus range are still seeing multiple offers if priced right. Meanwhile, in the southern parts of the county like Springfield and Lorton, buyers are finding slightly more breathing room, though competition is still stiff. Moving to Arlington, the impact of Amazon's HQ2 and the National Landing development continues to be the primary driver of market sentiment. Condo inventory in Arlington has seen a modest increase, providing an entry point for first-time buyers who are priced out of detached single-family homes. Detached homes in neighborhoods like Lion Village and North Arlington are effectively a micro-market where supply almost never meets the high demand. Alexandria is uniquely positioned with its mix of historic charm in Old Town and the rapid modernization of the West End and Delray. The city's walkability and proximity to DC make it a perennial favorite for young professionals and families alike, keeping the price floor very stable. We've noticed that homes with unique architectural features or historical significance in Alexandria are fetching significant premiums this season. Loudoun County, while slightly further out, is seeing a surge in activity as buyers look for more square footage and newer construction. Ashburn and Leesburg are benefiting from the continued expansion of data centers and the infrastructure improvements along the Silver Line Metro. What's fueling this activity? Despite mortgage rates remaining higher than the historical lows of 2021, the local economy is exceptionally robust. Low unemployment in the government and defense sectors, combined with high-paying tech jobs, provides a steady stream of qualified buyers. Many buyers have accepted the new normal of 6 to 7% interest rates, choosing to buy now and potentially refinance later if rates drop. Let's talk about inventory. While it rose by nearly 7%, we are still under 2 months of supply. A balanced market is 5 to 6 months. This means sellers still hold significant leverage. However, the lock-in effect is slowly thawing as life events force people to move regardless of rates. New construction in the outer rings of Fairfax and Loudoun is helping, but it isn't enough to satisfy the hunger for homes closer to the urban core. Average days on market dropped from 18 to just 15. If a home is priced well and in good condition, it is gone in the first weekend, period. For buyers, this means you must be pre-approved, have your must-haves list finalized, and be ready to tour a home within hours of it hitting the market. The median price dip of 0.4% is a signal of buyer selectivity. Buyers aren't just throwing money at anything anymore. Homes that need significant work or are perceived as overpriced for their condition are sitting longer, sometimes even seeing price reductions. This is a healthy shift. It rewards sellers who have maintained their properties and provides a reality check for those testing unrealistic price ceilings. Now, let's get tactical. Buyers, your biggest advantage right now is the increased inventory. Don't be afraid to look at homes that have been on the market for 14 plus days. Those homes may have had an initial pricing error or poor marketing, giving you an opening to negotiate on price or even ask for closing cost credits. Also, broaden your search. A slightly longer commute might save you $50,000 to $100,000, which goes a long way with current interest rates. Sellers, your window of opportunity is wide, but it is not unconditional. Presentation is your best friend. Staging, lighting, and curb appeal are vital. Price your home at or slightly below the most recent comparable sales. This strategy often triggers multiple offers, ultimately driving the price higher. Be prepared for inspections. Buyers are becoming more vocal about repairs, so addressing minor issues before listing can prevent deals from falling through. Investors look for BRRRR opportunities in established Fairfax and Alexandria neighborhoods. renovation-ready townhomes are in high demand for end users. The rental market remains exceptionally strong. With home ownership becoming more expensive, the pool of high-quality renters in Northern Virginia is expanding. Keep a close eye on zoning changes. Many areas are looking at higher density, which could unlock value for properties near transit hubs and commercial centers. Looking ahead to the summer, we expect inventory to continue its modest climb as more sellers realize that the market has stabilized at these higher rates. Competition will remain intense for the A-plus properties, but the B and C properties will require more patience and better pricing strategies from sellers. We don't anticipate a major price correction. The underlying demand and the strength of the Northern Virginia job market act as a powerful safety net. It's also worth noting the metro effect. Since the expansion of the Silver Line, areas like Ashburn and Reston have decoupled from traditional suburban trends. Being within a 15-minute walk of a metro station can add a 5 to 10% premium to a home's value and significantly decrease its time on market. We're seeing a shift in what buyers value. Home offices and high-speed internet infrastructure are now top-tier requirements, often surpassing open-concept kitchens. Sellers who have invested in energy-efficient upgrades like smart thermostats and modern insulation are seeing better returns and faster closings. Negotiations are becoming more balanced. While we still see as-is offers, many buyers are successfully reintroducing home inspection and financing contingencies. This is a sign of a maturing market. It's less about a blind scramble and more about calculated risks and due diligence on both sides of the table. The high volume of sales in May, $1.82 billion, pumped significant tax revenue into our schools, parks, and infrastructure. It's a win for the community. A healthy real estate market is the backbone of Northern Virginia's prosperity, and despite global headwinds, our local market remains a beacon of strength. In summary, May 2026 was a month of high activity, moderate price stabilization, and a welcome, if modest, increase in inventory. It's a time of opportunity. Whether you are looking for your forever home, selling to downsize, or building an investment portfolio, the fundamentals of Northern Virginia are on your side. Success in this market requires hyper-local knowledge and a clear understanding of the data. Don't rely on national headlines. The DC suburbs are their own animal. If you found this deep dive helpful, please like the video and subscribe. Your engagement helps me continue to provide these detailed Northern Virginia reports.